helping is as prices are coming down and the consumer's getting better and better deals, and they're spending. So I think that is sustaining. You know, a lot of people say real growth causes inflation. In this case, and actually in history, most times if you cut prices, you'll get more activity. The consumer, as long as the labor market hangs in here, and yes, today was very reassuring that way. As long as the labor market hangs in here, and companies like Walmart and Costco and auto companies either increase their discounts or cut their prices, I think the activity will come. And the labor market will continue to hang in. But if they try and jack prices back up, it was very interesting to see FedEx, after turning positive in revenues and then turning negative year over year on revenues, basically saying they're going to use prices to make it up. I think that's going to backfire. And I think during the next year, that many people will understand how deflationary the undercurrents are in the economy. Now, deflation is not always bad. Part of it is because of innovation, technologically enabled innovation. The car prices, EV prices are coming down. Their costs are coming down too. So I think there's a lot of confusion in terms of what's going on out there, because productivity is stronger than expected, giving companies the latitude to cut prices and salvage margins. If that sustains, great.
Kathy, when we talked with you earlier this year, let's go back to March for a moment. You mentioned the possibility of inflation going negative this year. You also talked about unemployment going above 5%. Are those still your calls?
Yeah, this year, I mean, we're going to have to push it out because inflation did levitate as companies tried to price to make up for shortfalls in unit growth. It levitated in the 3.5% to 4% range. Now it's broken below 3%. And we're hearing more and more companies, basically trying to attract consumer attention with lower prices. So yes, if you look at money growth on a year-over-year basis, it was negative for, I think, about a year and a half, maybe more. Money is a leading indicator for inflation, and we do believe that inflation will go much lower than people expect right now. Wouldn't be surprised to see it go negative, especially if the consumer is worried about job loss, whether because of AI and automation generally, or what have you. So the saving rate tends to go up during those periods. And that will mean, we believe, that companies will have to price even more aggressively. In terms of over 5% unemployment rate, we could see it. We could see it. I will say today gave me pause in terms of this productivity dynamic and sort of companies may not, if they get the productivity growth from existing employees, they may not feel like laying them off. They can lower prices to keep consumer demand going.
Hey, Kathy, election front and center. We're just a month and change out from the election here in the U.S. And I'm wondering how this dynamic, in your view, changes whether President Trump is reelected or we see a Harris administration.
And I wonder who you would support, too, in terms of what you think is good for the U.S. economy and America.
Okay, so our focus is on innovation, and something very important happened this past year. We were very concerned that excessive regulation was driving innovation off our shores, particularly when it came to crypto or digital assets. We've had a very hostile regulator. And the same, I would say, is true of the FTC in terms of denying M&A, because that has prevented a lot of innovative companies from enjoying liquidity events by selling out to bigger companies. I think we're hearing from both candidates that those two jobs are on the line, maybe for that reason. And we're seeing more alignment that innovation solves problems and so we should not discourage it. So from that point of view, I'm happy to see the bipartisan movement here. We'll favor lower regulations every day when it comes to innovation. I don't think tariffs are a great thing at all for innovation and for economic activity. So there's something on both sides that will give us pause. But the most important thing is the biggest impediments to innovation. We think that we're developing clarity around what's going to happen at the SEC and the FTC.
So do you think one thing is better than one of the candidates, I should say, is better for the investment environment, for companies versus the other?
So here I'm going to revert to being the CEO of a company where I'm representing both sides, and I'm focusing, therefore, on innovation, which is of primary concern to us. And I've given you a sense of where we think both sides are on innovation. Regulations, the one that will lower more regulations, because regulations are strangling this economy, strangling small business, strangling big business. That's a very important one. Tariffs would be harmful as well. So
fair enough. Well, let's talk innovation, which is your world. AI, big news this week. OpenAI's raising $6.5 billion in new funding, $157 billion valuation. ARK put in $250 million. The Wall Street Journal reminding us that that's the minimum amount required to open up their financial document. So why this investment? Why are you interested? And what did you learn about the company and its growth trajectory, or about the business, to be quite fair, looking at those financial documents?
Well, we've been doing research on AI for 10 years now. That's why we were so early into NVIDIA. And we've obviously taken it down in most of our portfolios out of the flagship. One of the things that we've been looking for is the next big play. And we think NVIDIA is still a fine stock, but in terms of the unexpected out there, we do think it's going to be in the software layers. And as you know, Palantir has become a big position for us in the top 10. UiPath as well, it had a stumble, but it's coming back now. And I think as more and more people understand how well positioned it is, it will do very well. But a lot of the software companies that we think are going to benefit are in the private sector. And I'm thrilled that we have a venture fund that is really our purpose here is to democratize venture capital so that for $500, anyone can get access to OpenAI, which is the third largest position, or SpaceX, which is the largest position. But if you look at software, many people say, well, we have so many software companies in the public markets. What do you mean? And what we mean by that is we think that the software world is going to change fairly dramatically. And we're going to see a shift, maybe a share shift away from software as a service towards platform as a service. So think about Palantir and foundation models, and infrastructure as a service, so cloud. And the reason for that is because engineers are going to be made so much more productive, developers so much more productive by OpenAI and Anthropic and xAI and Google and Meta's Llama 3. We're going to see companies customizing their own software, for their own companies, as opposed to just going automatically to, one size fits all software as a service.
Hey, Kathy, forgive me. We only have a couple minutes left, so I want to get in a few more questions here. I don't mean to keep interrupting you. But you mentioned closing out your stake in NVIDIA. You did that in the flagship ARK Innovation Fund last year. But you also told us back in March that you used some of that to buy into Coinbase. Since February of 2023, Coinbase is up a bit more than 150%. No question, a great return. But NVIDIA up nearly 500%. since that time. Do you regret that move last year?
If you had if I had bought both Coinbase and Nvidia and sold something else, would I have been happier about that decision? Sure, I would have been happier. Actually, from the time we bought Coinbase to the time maybe we were talking to you or whenever we measured it, Coinbase actually had done better than Nvidia. It has come back in. Nvidia's had another big run, but we're now really focused on the future. And so software to us is going to be a huge opportunity. Foundation models, we think, will deliver $15 trillion around that in the next 5 to 10 years in market cap. That's from a standing start. And we'll see what happens to NVIDIA over that time. You know, I think...
Is there something that could make you buy into NVIDIA at this point? Or add it to your flagship? I mean, I know you owe some, but yeah.
Yeah. If the price came down, you know, again, I think, I must say one of perhaps my weaknesses in a momentum market is watching a lot of momentum drive the stock and realizing that a lot of people who never owned it are getting in and might be weak holders. So, you know, that factored into my thinking. But, you know, we enjoyed, we got into NVIDIA at 40 cents based on this stock in 2014. So, you know, wherever we got out, we were extremely happy with what it's been the third largest contributor to our flagship fund. So, you know, tactically, sure, we would have loved to still have it, you know, at a bigger position in the portfolios. But again, we're all about the future, and our research is focusing us on this software layer that has huge amounts of appreciation ahead.
Let's go to Tesla, number one holding in your flagship ARK Innovation ETF. It's down about 40% since an all-time high back in November of 2021. Little change year to date. You know, when do you decide, you know, in terms of Tesla, you know, it's a different market, an EV market. You understand, you know, what's going on in that marketplace more than ever. You know, what is your thinking about Tesla today? You've got an estimate of $2,600 a share for 2029. What gets us there? And just quickly, sorry, we've only got about 30 seconds.
Autonomous mobility, think 1010, October 10th here. That is going to focus analysts not just on EVs, but on the autonomous opportunity. Tesla is the largest AI project in the world. Talk about shifting resources from NVIDIA into Tesla. We think longer term, that is going to prove to be a very good move.
We know you have to run, so appreciate your time. Be well. Kathy Wood, of course, of ARK Invest, joining us right here on Bloomberg Business Week on radio and TV.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be an up day for the Dow, the S&P, NASDAQ, a record for the Dow Jones Industrial Average. Kathy Wood, CEO of ARK Investment, just wrapping up a wide-ranging interview right here on Bloomberg Radio, touching on a number of topics, including Jobs Friday and the U.S. economy.
The cyclical part of the economy is sick. It's sick. If you look at the sectors in the economy, one by one, they've been falling into a recession, no matter what the headline numbers say. Housing went down immediately when the Fed started raising rates.
Kathy Wood of ARK Investment interviewed right here on Bloomberg Business Week. As I mentioned, a record for the Dow today, up 341 points, up 0.8%. S&P up 51, up 0.9. NASDAQ up 219, a gain of 1.2%. 10-year 3.96% on this Friday. 2-year yield 3.92%. Stocks, though, ending the day near session highs. A record for the Dow as data underline the resilience of the U.S. economy and boosted soft landing hopes. Jason Bottenfield is Managing Director of Park Cities Group at Stewart Partners. He was a guest here on Bloomberg Business Week.
I think the Fed is kind of like Smokey the Bear. You know, we've got some embers that have been laying there, you know, on fire, burning, not necessarily on fire, but hot. And a little bit of wind could spike up inflation again, and they definitely don't want that.
Jason Bottenfeld of Park Cities Group at Stewart Partners. So again, record for the Dow Jones Industrial Average, the Dow, the S&P, NASDAQ, all advancing today, 10-year 3.96%. Spot gold today down 0.2%, 26.51 the ounce, while West Texas Intermediate crude oil today rallied 1.4%, 74.71 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. There's no better way to introduce our next guest than just read from her latest story,
I know,
Carol.
it's pretty amazing.
I kind of do this all the time with Amanda Mole. Scan the crowd at any youth soccer.
Wait, we need like
ahead.
table reads of all of her stories. We're just going to start doing that, but go ahead.
Okay, scan the crowd at any youth soccer or softball tournament in America, and you're likely to find that many of the moms cheering on their kids have brought along a similar array of gear. Folding nylon camp chairs, a rainbow of enormous Stanley insulated cups, collapsible wagons with off-road wheels, and a menagerie of boxy, bright tote bags that look to be constructed from the same pliable, perforated plastic as Crocs.
How do I not have one of these?
Well,
How is
okay,
that?
these are bog
Does Rebecca
bags.
have one?
No, I've never heard of these.
All right, go ahead.
Okay, maybe it's because my kids aren't old enough to be in these youth sports scenes. I have no idea what these things are, but they are big business. Amanda Mole is a Bloomberg Business Week senior reporter. She writes about the big business of bog bags. It's my alliteration there. She joins us from New York. What are these things, Amanda? And what does it say about Carol and me that we have no idea what these things are until
Be careful, we can cut your mic at any time.
Well, it says mostly that you live in New York City.
Okay. Is this not a New York
very
thing?
close by. No, these are mostly super popular in the suburbs, and they really over-index in the suburbs.
We're both
in the
wiping our
Midwest and
foreheads
South.
like, whew. Okay, go ahead.
They were actually, the company was started very near to the city, though, in northern New Jersey. They are big, hyper-usable tote bags. They're very lightweight, and they are especially popular among nurses, healthcare workers of all types, teachers, and moms. You can put a ton of stuff in the full-size version. They sit up when you put them in a like in the passenger seat of a car or on the ground at a youth soccer game or at the beach. So they are just like hyper utilitarian, hyper functional totes that have really caught on, almost entirely based on word of mouth.
They look like, they literally look like bags made of Crocs. They have holes in them.
They are perforated. You can put little accessories in them. You can customize them, which is also a big appeal for a lot of people.
Oh, yeah.
You can decorate
Bog Bevy. 20
All right.
bucks.
Who is
beverages.
Who is the Wonder Mom behind all of this?
Her name is Kim Vaccarella. She is a mom from New Jersey. She was an accountant in a real estate office before all of this happened, and she was the mom of kids who played sports. And she wanted a bag that could hold like just a ton of like unwieldy stuff to take to their games, to take to the beach, to just sort of take everywhere. And she couldn't really find anything that was, that fit all of the criteria that she was looking for. So she decided to design one herself. She didn't have any background in design. Her husband is not in the industry. She knew a couple women who worked in the city, who worked in the apparel industry. So she asked them for some pointers, for some recommendations, but she did the whole thing from scratch. She still owns the company. It's an entirely sort of like self-made business.
But at the same time, it hasn't been like a rocket ship up. It's been a long and winding road with some pretty significant speed bumps. She kept at it, though. What were some challenges that she's faced just in the last, more than 10 years since she's been working on this?
Right. She first prototyped the bag in the late 2000s, and she started ordering like a couple hundred at a time to sell in like local northern New Jersey boutiques. And she did pretty well with that, she told me. And she wanted to bring the bag to like a larger selection of retailers and pitch them. So she and her husband used like most of their savings to make an order of like an entire container full of bags that came over from the manufacturer overseas. And when they got here, they were damaged. So she ended up donating the entire lot to Hurricane Sandy recovery. That the hurricane hit the Jersey Shore a few months later. She decided that she was in over her head and wound down the business. And she and her husband found a good cause to send these to, so they could write them off and sort of try to recover financially from all of this. And then the people who received them, as they were full of supplies for people who were recovering from Sandy. And a few months later, when things started to get closer to normal for some of these people who received them, she started getting calls. People wanted more of them. They loved the bags they had received, and their sisters or aunts or cousins or coworkers wanted their own. So she started the business back up.
I feel like this is karma,
started ordering
like
more
incredible
bags.
karma.
I'm thinking like you pay it forward, right?
Yeah.
You just do something, you have a bad luck, you do something really good, and then eventually like maybe it actually comes back to you. It's really wild. It reminds me like, something that could become so ubiquitous, like the LL Bean canvas bags that I feel like everybody uses for anything and everything. So where is she now? What kind of growth has she seen? Where can we get them? Where can I get one? Where can Tim get one? Like, just tell us a little bit more. Like, where is it going?
Right. Well, the business grew like slowly but surely until the pandemic hit. And then during the pandemic, she sort of had another like crazy spurt in growth because people who were going back to work, healthcare workers and teachers in particular, really, really liked them. And the bags had caught on in Peloton Facebook groups that had a lot of these particular types of workers in them. And when Peloton took off during the pandemic, so did these Facebook groups. So this recommendation moved by word of mouth. In 2019, before the pandemic, they sold about $3 million worth of bags. They are on pace for $100 million in sales this year.
God. Is it just, and it's not just bags
still,
anymore,
still
right?
Self-funded.
It's not just,
Sorry.
yeah, go ahead.
It's still self-funded. They have about 50 employees now. It's still based in northern New Jersey. They have mostly just bags, but they sell some accessories to customize the bags. It is largely, they have, the little things that you can poke into the holes in the bag are very, very popular, and they're always coming out with more of those. They have experienced just sort of meteoric growth. She told me that there's been no like single moment that really changed everything. There was no like viral TikTok. There was no like celebrity endorsement. They don't pay for much advertising. It is almost entirely word of mouth.
There's no Beyonce bag yet?
No. And based on like all of my research, this is true. Like there is no like outside force that made this happen except moms and nurses and teachers recommending them to each other and finding a lot of utility in them.
I love that you can just kind of like rinse it down. I love things that you can just rinse it down.
Like spray with those.
Really, right?
Yeah, of course.
Unbelievable. You wanted to say, wait.
Yeah, are they going to get bought by Crocs? Do they go public? What happens here? Just 20 seconds.
She is really intent on continuing to grow the business for right now, but I'm sure if she wanted to sell, she could do it no problem. They're sold everywhere from Bloomingdale's to Bass Pro Shop right now.
Wow.
Oh my God. Do you have one?
I don't have one, no. Okay. I don't have any kids.
Okay. Yeah, but you don't have to, as we know. And Mandimal, We just love talking to you. Amanda Mull, of course, Bloomberg Businessweek senior reporter, joining us. Coming up next, the GOAT wants to sell you a watch. That's next on Business Week.
is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, come on, let's go. I want to get to Mr. Tarmy.
He's the GOAT, and he's got a watch to
James
sell.
Tarmy?
Oh, I'm getting to James.
Oh, okay.
He's the GOAT, and he's got a watch to sell you and maybe a jersey or two. We're talking about Tom Brady.
The GOAT.
Also, there are multiple GOATs.
GOAT.
He's a
One
GOAT,
GOAT.
okay? Because we got the GOAT of Bloomberg Pursuits with us.
We do.
James Tarmy. He oversees arts and culture at Pursuits. He joins us from New York City. All right, James, what is going on with the watch industry right now, and why is Tom Brady eager to sell you a watch?
Well, I can't tell you exactly why Tom Brady is eager to sell his watches. I can tell you for sure he's not eager to sell me a watch because I can't afford any of them.
Come on, there's
but-
some in there for what, $300,000 to $500,000?
Oh, I totally forgot. If you'd reminded me that it was only $500,000,
Yeah.
I absolutely would have started to bid on it. You're totally right.
There's no swatch in there that is up for auction.
Yeah.
No.
Tom Brady isn't selling any Timexes that we know of.
Hey,
But 47 pieces of his collection of watches and sports memorabilia at Sotheby's, New York. This is going to happen on December 10th. Tell us about his collection, because I had no idea he was such a big watch guy.
So he's a huge watch guy. This is just a selection of what he's selling. He has a lot more, though Sotheby's wouldn't actually tell me how much more. What he is selling, though, is pretty impressive if you're into watches. There is the Richard Mille Baby Nadal watch, which is estimated between $300,000 and $500,000. There's a highly desirable rose gold Patek Philippe Nautilus. That one is a mere 180 to 240,000. But the real
Piece de resistance.
carry on. Sorry.
I'm really bad at French. Piece de resistance. What is
Exactly right.
James is kind.
Exactly right.
You're so bad, Master. But go ahead.
No, that was flawless. I was transported to the Marais. Anyway, look, the most expensive lot in the sale that we're aware of is this custom-made white gold and diamond set watch by Audemars Piguet, which is estimated between 400,000 and 800,000. And how is it customized, you might ask? Well, it says Tom Brady in diamonds on the dial.
I think what I love about this watch.
We're putting it up for everybody who's
Yeah, there it
watching
is.
on YouTube.
James, I
and
think what I
Bloomberg
love about this
Originals.
watch is oftentimes you look at your wrist and you look at the watch on your wrist to see what time it is. But if you ever forget your name and your name is Tom Brady, what you can do is you can just look at your watch and it says Tom Brady.
Oh my God, I'm
right
Tom
there.
Brady.
And that's what I love about
The
this watch.
the danger, of course, is that if you own this watch now or you buy it and you're not Tom Brady, that might lead to a tremendous amount of confusion.
That's a good point. I don't imagine that's going to take the price down though at all at Sotheby's.
Hey, listen.
I don't think so. Though, as apropos of your first question, the market for watches is by and large not amazing. Same with sports memorabilia. The only exception that we have currently in the market is the single owner celebrity sales. And that might come back to the first question that you asked, which is why is Brady selling now? Well, we have some indication that if you are famous, and Tom Brady is famous, and you have some really important objects, people are going to fall over themselves to purchase them.
So that's what's cool, right? It's not like it's, the auction house collecting from a bunch of different collectors and then putting the Tom Brady auction out there. These are coming straight from him. So it could have literally, he ripped it off his wrist, right? And it's like, now could be yours kind of thing?
That is exactly right. And, that's also the case with a lot of the sports memorabilia. There are multiple jerseys, helmets, and so forth. All these came straight from him. And oftentimes, if you're buying on the market, on the secondary market, rather, you're not buying from the sports star herself or himself. You're buying from another collector. So the fact that this is straight, ostensibly from Tom Brady's closet, I think will add quite a bit of desirability to these objects.
I would say so.
You would?
Sources say.
Sources say, okay.
Yeah.
I didn't know Carol was such a football fan.
Hey, I like football.
Yeah?
I'm
Patriots?
Really a Giant fan.
Michigan? Because there's Michigan jerseys there too.
Yeah, that's kind of cool too, right? Like you're going early in his career.
Very, very early. There's an NFL Combine shirt from his 40-yard dash at the 2000 NFL Combine. Carol, I'm sure you're very familiar with this since you love football so much.
Huge football fan.
Yeah,
Was
but
that sarcasm?
Never for me. But that's a white T-shirt, and that has an estimate of $100,000 to $200,000. So, this is going back relatively early in Brady's career, but it's also not so cheap.
What's not so cheap? You sound like my
Well,
husband.
the $100,000 to $200,000.
Oh, okay.
100,000 to 200,000, in case you didn't hear James.
Yeah, but that's actually a bargain compared to some of the other sports memorabilia.
Is it clean? Is the shirt clean? Has it been washed?
Does it smell like
I
Tom?
wonder if Tom Brady put it in the washing machine himself.
I would think not. You think he does?
Hey, maybe in
also
the year
have that.
2000.
Like a Tide Pod?
Maybe in the year 2000.
Maybe a little, whitener or something. I don't know. It's a little wacky. This is such a cool story, and we're so glad we could talk to you before we kick off the weekend. James Tarmy, you are the GOAT of Pursuits. Don't tell the editor of Pursuits that, okay?
I will tell him every single day if he's watching it.
He's listening. I know he is. I saw him earlier.
Anything with arts and culture and more, check it out. James Tarmy of Bloomberg. James, have a good weekend. All right, that's going to do it for us. We are here.
We're here. We're also here because we have a great team behind us. Anthony Mancini, Colin Tipton, Steve Lanzone, Meredith Frank, Sarah Livesey. I think, is Juan Torres in there?
Juan Torres on YouTube, Justin Milliner, Sebastian Escobar, Elizabeth Cedrin, and the one and only GOAT, Paul Brennan. Have a good weekend. Every Balance of Power starts now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Kaylee Lyons. The October jobs report tops all estimates. Technically, it was the numbers looking back on September with an unexpected decline in the unemployment rate, leading to a repricing of rate cut expectations. We'll get live reaction from the White House with Jared Bernstein of the Council of Economic Advisors. Plus, we'll have more on the political implications of the data with our signature panel, Rick Davis and Jeannie Shanzano, as Kamala Harris campaigns in Michigan and Donald Trump surveys storm damage in Georgia before a visit to North Carolina. And Israel carries out bombing raids on Hezbollah targets near Beirut, with President Biden discouraging an attack on Iran's oil fields. Jennifer Kavanaugh of Defense Priorities will have more this hour. But we begin on this Friday evening with the blowout jobs report. Acting Labor Secretary Julie Su had this to say about it on Bloomberg earlier today.
This jobs report, as great as it is not a declaration of victory, it's a declaration of progress. We're making significant progress, and we need to keep up that trend. We need to keep up that work. Manufacturing jobs have grown, but they're going to grow more as we keep investing in America.
Joining me now for more from the White House North Lawn is Jared Bernstein, chair of the Council of Economic Advisors. Mr. Chairman, welcome back to Bloomberg TV and Radio. Happy Friday and Jobs Day to you. 254,000 on non-farm payrolls. Should we be expecting to see a figure like that next month?
Well, before I get to the job numbers, let me just stress that our hearts and our actions here at the White House are also with those whose lives and whose communities were devastated by Hurricane Helene. The president and the vice president are going to continue to deploy all the necessary resources to help those affected by this terrible event. Turning to the great jobs report, look, any month can bip or bop one way or the other. The thing we like to do to make sure that we smooth out these ups and downs is to take a 3-month average of the underlying pace of job growth. If you do that, you get payrolls at 186,000 per month for the past 3 months. That is a healthy rate of job growth. It is certainly strong enough to push the unemployment rate down. It's close to anybody's kind of upper bound of what you might think of as a break-even rate, the rate of payroll jobs you need to keep the unemployment rate where it is, and very much a full employment kind of condition in the job market.
Well, Mr. Chairman, you're absolutely right to note the humanitarian, potentially economic disaster this country has experienced in the Southeast thanks to Hurricane Helene. Before we continue our focus on the labor market, do you have an expectation of what the economic toll ultimately of the storm will be when all is tallied?
Well, first of all, thanks for acknowledging the importance of that on a day when we're touting strong economic data. You know, I could think about the economic toll, and there's always a difference, by the way, in the national accounts between net and gross activity. So sometimes you'll see economic activity bounce back strongly because of rebuilding efforts. But I really want to focus on the humanitarian challenges that have been so deep. And, you know, I want to make sure that everyone is aware of the extent to which this White House is laser focused on making sure those folks have all the resources they need. We're not done with this when it fades from the front pages by a long shot. We're going to keep, as I said, deploying necessary resources until folks there are well back on their feet.
Well, of course, we saw the president surveying the damage in a number of affected states over the last few days. But earlier today, sir, we saw the president in the briefing room. Something we haven't seen to this point in his presidency, where he had to field a question about an allegation from Senator Marco Rubio about today's job numbers being fake. This was his response, and then I'll have you respond as well.
If you notice, anything the MAGA Republicans don't like, they call fake. Anything. The job numbers are what the job numbers are. They're real. They're sincere. They're what we are. And by the way, just look at how the EU talks about us, how they like to have an economy like ours. Just talk about the rest of the world looks at us and what we're doing. So I don't want to get going.
Mr. Chairman, how would you explain what's happening in the data to those that question its validity?
Well, first of all, let me say that I saw the same clip. I happened to be watching that streaming as the president made those comments, and I quickly shot him off an email saying I thought he fielded that question perfectly. I thought he was spot on. You never hear those folks complain when there's a downside surprise, only when there's an upside surprise, and that shows you how disingenuous they're being. Obviously, the Bureau of Labor Statistics has impeccable integrity when it comes to these numbers, and to try to politicize them with such an obvious false message is, pretty reprehensible. What was your question?
Well, just how we should be thinking about the kind of vacillations we are seeing in the labor market, and how we saw upward revisions this time. We saw downward revisions previously, an 800,000 plus downward revision to the original BLS estimates when looking back over the period.
Yeah, I don't remember any of those folks calling that fake news. Yeah, they didn't.
All right,
so again, it's ridiculous. So, but your question is a much better one, which is how should we think about the ups and downs? Well, one of the things you do is you smooth things out by taking longer-term averages, as I did earlier in our conversation, and then, of course, you recognize that as new data comes in, you're going to get revisions, and that revision doesn't mean there was anything untoward. It just means that when you get new information.